Hello and welcome to this November 11th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at Church & Dwight Company, ticker symbol CHD. This is about a $4.7 billion consumer staples company. Given the market's a little bit overbought, this is maybe a little bit of a defensive play, looking into the consumer staples space. But CHD, you can see, was in a downtrend throughout the entire summer, continued putting in lower lows, lower highs, and that continued until early October. And you can see the volume really picked up in early October. We took out this trend line, this downtrend line that was in play. And then after breaking above $65, $50, $66 and taking out this trend line, you can see the stock ran all the way up to 70 before finally turning around and coming back down and retesting the area of this bullish action. We had several tails at the end of September. Stock was really struggling to get through about 65, 65 and a quarter, and then you can see the start of this huge candle here was at about that 65 and a quarter area, and that's where you can see this green dotted line coming across to show some price support. Also, the trend line that was broken back in early October, many times stocks will come back down and they'll back test those trend lines, and you can see that's what's happened so far with CHD. Now if we go down much further from here, then I think we might have a completely different ball game, especially if the volume picks up. But this is an area where I would expect for CHD to maybe turn the corner and start heading higher again. You can see that on Wednesday we printed a bullish engulfing candlestick off this downtrend. That's a short-term reversal signal that would suggest that maybe the downtrend is over. The fact that we're back down near price support and back testing this trend line all, I think, bodes well for CHD here in the near term. Volume has been heavy the last couple of days, but again, we haven't lost that major support area. Instead, we're putting in a reversal right there. So CHD, I think, looks kind of interesting here in the $65 to $66 range. I would look ultimately for the stock to go back up and challenge the mid-October highs near $70. To the downside, I think if you go much below about $64.50, $65 in that range, and the volume picks up, I would be careful. The RSI had been holding above 40. We did take a quick dip just below 40 before reversing back up again on Wednesday, where now we're back up at 43.5. And another maybe a little bit of a warning sign here is that the MACD has made a bearish crossover, or cross under, depending on how you look at it. But the MACD is crossed back below the center line. That's somewhat indicative of bearish momentum, but keep in mind the MACD takes a backseat to price volume, that combination of price volume, and to me we're okay there as long as we don't go down, lose these recent lows and the trend line. If that were to occur with heavier volume, then I think we have a completely different animal. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.